Hey, welcome back to Everyday Economics. This is the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, publisher of the Center Square. Everyday Economics is brought to you by the Center Square. To support Everyday Economics, you can make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on the 21st of February, 2025. And joining me, as always, my friend and colleague, Dr. Orphe Divounguy. He's a PhD economist. Dr. O, it's time to talk about the week ahead. Your column runs every Monday at thecentersquare.com and, of course, is distributed across the United States and runs in hundreds of newspapers and on websites all over the place. People are probably looking forward to hearing what you have to say. So what do you have to say? What's happening next week? We're supposed to get PCE, the personal consumption expenditure data. Are you feeling it or are you not feeling it?
Well, yeah, I mean, next week there's going to be quite a bit. I think we're going to start the week with a Fed official speaking. We're going to have the Case-Shiller price index, home price index, and we already know what's going to happen in the Case-Shiller price index. If you follow Zillow, you know that Zillow does a very good job at forecasting where the price index, the Shiller price index, is going to be at. So that's very easy. Price growth has been slowing. Housing price growth has been slowing. It's expected to slow further in the year ahead with new listings, more supply, existing homes coming back on the market. Mm-hmm. I think existing homes are up about 12% relative to a year ago. Okay, and inventory has moved higher, and so with higher sellers, higher inventory, higher number of active listings, homes taking a little bit longer to sell, price growth should be easing. Then we're going to get new home sales, and I think that's going to be interesting because what we've seen in the past couple of years is existing home sales kind of surprising on the downside, right? Lower due to fewer sellers. But we saw new home sales continue to move higher. In fact, at the end of 2024, they were moving, they surprised on the upside, right? Builders were selling even more. And then you look at, the National Association of Home Builders reports, and you learn that basically, look, compared to last year, fewer builders are cutting their prices. The average price cut is actually lower than it was a year ago. Builders, and despite that, builder confidence is pretty much not good. And what builders are saying is, well, we kind of know how to deal with mortgage rates, and but we were expecting them to come down. They are saying, hey, we kind of know how to, we can do incentives and we can do rate buy downs for consumers, but we thought eventually this would have to go away.
Well, let me ask you this: Are you sensing some impatience here? Because I know understandably you've been sort of like, that we've been on a glide path to something maybe a little bit better from the standpoint of the marketplace overall. But that sounds like maybe you're kind of you're detecting something that you maybe hadn't picked up on.
Well, let me say this: we were expecting that. I think most people were expecting that by now the Fed would be cutting more. Yeah. And by now, the economy would be slowing more. And the slowdown, right? When I say slowing, I say slowing, but not crashing, right?
Right.
And that the slowdown would result in maybe lower inflation and that mortgage rates would come down a little bit more than they have. I think that's what a lot of people were betting on. And that's just not what's going on. Rates are staying elevated. The Treasury yields staying elevated. Benefits some industries, but definitely doesn't help a lot when you're in a housing market. You have, so that's staying higher for longer. And I think some of the biggest builders have adjusted and they're okay. The smaller builders are still struggling a little bit with that. And then you have the latest fear, which is the tariffs. And the tariff fear is basically acting to, would potentially raise the cost of a lot of construction materials and components that are coming from these countries, especially the nearby ones like Canada and Mexico. Mm-hmm. And so the tariff fears are also weighing on builder confidence. So that's and so of course, and of course, we saw housing starts this past week they plunged. Part of that was really the weather-related disruption in January, and I'm hopeful we'll see a rebound. But we can't really get builders back to work if there's so much uncertainty out there, and so we need a little bit less policy uncertainty, and that means that's going to come from DC. DC has to kind of slow its roll a little bit in terms of the big public announcements, because businesses are getting a little bit scared of what could come next. Anyway, let's keep going. We're going to have Q4 GDP revision. The market expects GDP to have increased above 2%. I think we still have a strong economy. Yeah. It's that some segments of the economy are basically frozen in place, waiting. They're strong. They're not laying off people, but they're just getting squeezed because inflation is remaining higher for longer. Mortgage rates are remaining higher for longer. So they're really like just holding on. And the good news is we had strong productivity growth, and strong productivity growth has supported the U.S. economy. Hopefully, if we continue to get that kind of productivity increase, hopefully it's enough to bring inflation lower. Which brings me to my last point, of course, the personal consumption expenditures, the main event next week. The last one, we had an uptick, right? 0.3%, 3.1% year over year.
Right.
Went from, on the headline PCE, went from 2.1% in September to 2.6% in December, right? So we've been on the rise. The core PCE went from 2.7% in September, and it's been kind of flat, this one, at 2.8% in December. And so everyone is going to be waiting to see whether or not we're getting more disinflation, or if we're going to continue to see an acceleration in the price index. The latest PPI number that we got suggests that, by the way, what does it matter if businesses pass increased costs to consumers, right? PPI inflation can lead to higher PCE inflation. And so the latest PPI numbers, the ones that matter anyway, suggested that potentially PCE could come in a little bit lower than the market had expected. And so we're going to be paying attention to that number on Friday. It's going to be a big one. So stay tuned.
Well, I appreciate your thoughts as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics wherever great podcasts are hosted.